Neil, when you look at, first of all, the fiscal, side of things and what Boris Johnson, the Prime Minister, is trying to spend, coupled with the fact that we don't really have a clear view of what happens in Brexit next, what does it mean for UK assets?
Well, I think in general, I'd like to feel that Boris Johnson is putting more positive narrative around the Brexit issues. I think the Theresa May administration was doing nothing in almost all senses of the word. So I think the fact that Boris has got a plan outside Brexit, I think, is good for the UK. But I think for many international and even many domestic investors, until we understand the mechanisms and the politics around Brexit, I think it's too early to say what one should be doing with UK assets. What we would say at Allianz is that sterling is cheap. It's already priced in a lot of very, very bad news inside the political risks around the UK. And generally, because the FTSE has underperformed most international equity markets for the last 2 or 3 years, we would say the UK is cheap. It's under-owned, but you may not want to do a Matteo Salvini and dip your toes in the water just yet until you have a bigger sense of where we're going with Brexit.
But, Neil, is it cheap even if we have a no-deal Brexit?
I think it is, yes. A lot of that's already priced in.
Do you agree with that, Janet?
Well, we have been quite negative on UK assets, actually, for the past year or so, because we simply see too much downside risk for the UK economy from a political perspective and also from a global perspective. So we have been underweighting UK equities for quite a while.
It is about the United Kingdom and about multinationals. Neil, how multinational are the UK companies? I mean, can you really dismiss them from Brexit?
Well, I suppose what I would say is I think something like 2/3 of the FTSE is basically listed in the UK, but when you're talking about a company like Royal Dutch Shell, it's sort of its exposure in the UK is part of a small portfolio. So I would say we've seen that bifurcation. The domestic UK stocks have performed very, very poorly, like the house builders and some of the retailers. And a lot of the international stocks, I would say, have probably been sold down because of the exposure to sterling and the fact that they're in the FTSE. So I think it's a window of opportunity. And the last thing I'd say, Tom, is I think in the last 2 or 3 months, we've begun to see a lot of international capital moving in to acquire UK assets. That tells me on a 5 or 10-year view, there's increasing interest from US, European and emerging market companies to want to buy UK assets, while sterling in particular is so undervalued.
That's right where I wanted to go, Janet. I mean, the catalyst of a cheap currency is remarkable. Does Czenove believe the foreign money will come in at a 119 or 118 sterling?
Well, I think there's no doubt that, sterling at 30-year low is very attractive for international investors if you take a really long-term view. However, I think in the near term, I don't see a lot of foreign capital coming in because, the Brexit deadline is October 31st, which is approaching, and there doesn't seem to be a resolution in sight, and potentially we are very likely to head into a general election, and that really creates so much uncertainty. And I think the international investors are going to stay on the sideline for now.
I have a good pound chart, which actually saw it, fall quite significantly in March, since March 27th. So I'll get to that shortly. But Neil, are you looking at some of the Italian yields?
Not really. I think for the same reason as Janet's concerned about the UK, I think we're happy to sit there and say Italy's a unique case at the moment. We prefer some of the other peripheral yields where there's still a yield to hunt relative to Germany. So I think Italy's a very exceptional case, and you really have to understand the day-to-day dynamics that could come out of Rome, I think, at the moment.
Okay, the day-to-day dynamics is that we still are unclear about the economic plan of Lega and Salvini. Apart from, the VAT and things like that. What's your take on Italy?
Well, so obviously the economic momentum in Italy is slowing. So as the broader European economy. So I'm cautious on that. And the longer-term aspect is very poor as well. We all know that that's really due to demographics and productivity. And I think Italian bond yields are so sensitive to political development, which, again, we're seeing much more uncertainty at the moment. So I'll definitely be cautious on the region.
What are you expecting ECB to do? So we talked a little bit about negative rates. We have Madame Lagarde, showing up, I think, the 1st of November. How much firepower will Draghi use before she arrives?
To be honest, I don't think the ECB has actually a lot of firepower, but I think they will cut the deposit rate by 10 basis points, and that is really because they sound pretty urgent in terms of the concern on inflation in the last meeting, and I think they will definitely do something in the September meeting. But I think they will hold off QE for now because I think they want to investigate more on the tiering system and also to hold back some firepower for the rest of the year.
Neil, right now, price is up, yield is down, which means a lot of people have to consider cash. Is cash an asset right now?
I think depending on where you're investing, Tom, cash is an asset. I think if you're in the US, your 2-year treasuries is a perfect place to be able to park cash whilst you're waiting for a better opportunity. I think, unfortunately, for many UK and European investors where, cash is a negatively yielding asset, I don't think it is a place to park your money. There are some shorter duration corporate credits, or dare I say it, you go and hunt for some income around the world where there is some real income to be had in India or Indonesia. But I think unless you know exactly what you're looking for and how it's going to pan out, I think cash is not a place to be.